Hey everyone, and thanks for jumping back into the cryptoverse. Today we're going to talk about Bitcoin, and we're going to be looking at a potential bearish scenario. So we made a video on this a few months ago, back in November, December, I think. And back then we said, the 200 week is our kind of our baseline support, and I did say, it's potential. There is a potential that we could go to the 300 week moving average. And the reason for this, more or less, was if you just look historically speaking, after our first market cycle, if we scroll all the way back, you can kind of see that the 100-week moving average was more or less kind of our bottom area. There really wasn't a whole lot of data to go on, so it's not like we have a moving average that encompasses this data back over here. But the 100-week moving average was essentially where our bottom was. During the second cycle, the 200-week moving average was our bottom during this cycle. And we said that, during this cycle, potentially the 200 could be again, or even maybe the 300. Now, we did go down to the 300. There was a wick down to that point. And I've just gotten a lot of interest in people saying, okay, well, what is our bearish scenario? And why do I always say you should have capital on the sidelines? So in this video, we're going to talk about that. So if you guys like the content, please go ahead and subscribe to the channel. Turn your notifications on, give the video a thumbs up, and share it around. And also, if you would, check out the Telegram channel. You can see it here. You can see this link in the on TradingView. And also, if you want to join the premium list and get access to premium content, then check out my website at intothecryptoverse.com. So, kind of along the same lines of where we were in December or November, whenever I made the last video talking about a bearish, what could be our potential future bearish outlook. We're gonna discuss what might happen, and this is why you should always have capital on the sidelines, because a lot of people who want to just say jump into the market, they don't always have the foresight to think, well, what happens in 6 months if the price is 40% lower than it is today? Will you have the capital to capitalize on a move like that in preparation for a lengthening cycle? Because remember, the evidence supports the fact that Bitcoin will likely go to 6 figures by 2023. So if that's the case, then again, what happens in the short term is largely irrelevant. Whether we go to 14K this summer, whether we go back down to say 6K, again, it's largely irrelevant in the grand scheme of things. But ultimately speaking, if we go back down, it just presents you a key opportunity that you could take advantage of. And if we go up in the short term, it also presents a key opportunity because you could think about potentially taking profits, especially if the long-term outlook is lengthening cycles and not expecting the next peak until say 2023. But again, I just use the risk metric that I talk about on this channel a lot, and you can find access to on the premium list. And that's what I use in terms of buying and selling. But what we want to talk about is, where could we go? And one of the ideas, right, is, naturally we could go back to the 200-week moving average. And for those of you who are, unfamiliar with TradingView and unfamiliar with pulling up moving averages, I just want to show it for you so that it's, complete and you get an idea. So the top line here is our 100-week moving average. So this is the 100-week moving average. This is around $7,200. So this is why you see a ton of people in the market saying that, they see a retracement back down to 7,200, or at least this is one of the reasons. There's a few other reasons as well. But this could be a potential support area. But if we drop back down to the 200-week moving average, this is around $6,000. And remember, because of lengthening cycle theory, there's a chance, there's a really good chance we go down to the 200-week moving average. Now, that doesn't mean we go down to $6,000. Maybe we go down to the 200-week moving average in, say, a year. And at that point, maybe the 200-week moving average is $8,000 or $9,000. So you have to keep this in mind, that there's always the chance we go back down to this level. It is our, baseline of support, and it's possible that we head back there. One of the things I want to show you guys, just really quickly, I'm gonna get rid of the 100-week, and we're gonna put on here the 50-week moving average. So this is the 50-week, and one of the things I want to show you in general is just what happens when the 50-week moving average goes down, because we have talked about the time derivative of the 50-week moving average in the past, and I've gotten some requests to talk about it because, as we mentioned in a previous video, it has started going down again. So you can see, you know, if you zoom in, it has just ever so slightly started to decrease. Well, if you take a look at what happened last time this occurred, if we take a measured move, this was essentially where the 50-week moving average started to decrease. So it was around, you know, maybe this point right here. And from that point, it wasn't long, and we dropped around, you know, 47% or so. Okay, but this, you also have to remember that this drop here already took place in this market cycle, and in historical market cycles, we've never had a second move where the 50-week moving average went, like, you know, it turned back over. This hasn't happened before, so this is the first time. And again, I think this supports the idea of lengthening cycles. You could also just say, well, there's been increased volatility, which there has been, but I also think it is evidence of a lengthening cycle. Let's look at a time before that. What happened at a time before that when the 50-week turned over? So here's another time. So if we were to take a measured move and say, okay, well, let's say 50-week turned over at this point. If we go down to the price at that point and then say, well, where did we drop within the short term? You can see it was around 45%. Now, if, this is a big if, right? If we were to follow what has previously happened, and we're currently sitting at the, you know, the very first inclination of it starting to potentially move downward, and if we were to take, say, yet another measured move from this point and say go to the price, where would that put us? So if we were to drop around, say, this would be, say, a 56% move. So this is from the top, but this is down to, say, the 300-week moving average. So this would be quite a drop. But if you look, the 200-week moving average is around a 37% drop. So it would be, you know, it wouldn't be completely unheard of for something like this to happen. On the other hand, if you go back to the very first market cycle, this was very short-lived. And there was the 50-week moving average did make a turn to the downside at some point, but the price at that point just started increasing. So again, you know, I just got this comment, so I wanted to, you know, talk about it. Just because the 50-week moving average turns over is not, does not significantly mean, you know, that we have to drop. Does not mean that we have to go, you know, it does not mean that we have to go down, because you can see in this instance, the 50-week moving average turned over and started going down for a few months before ultimately going back up. And during that time, the price was just, you know, it was just moving upwards. It never really went down after that turnover. But in the last two market cycles, it did. But again, it was following a very, you know, speculative bubble peak, here and here. And then, of course, this one would be following this, you know, smaller, shorter term speculative bubble in a sense. So the reason we say, and again, I don't know what's going to happen in the short term. You know, I think there's a case to be made for the bulls, and that maybe we're going to go, you know, to 12, 13, 14K this summer. There's a case for that. There's also a case to say that maybe we're going to drop back down and kick the can down the road in terms of, you know, the lengthening cycle theory and seeing us continue to accumulate between, say, $6,000 to $10,000 for another 6 to 12 months. This is certainly possible. And because we don't know what's going to happen, this is why I say it's a risk not to have capital on the sideline. So at present time, I think the price of Bitcoin, this isn't updated live, but I think the price of Bitcoin, you know, is around $9,500, $9,600. So it's just, the risk level is still relatively high in terms of, I guess it depends on your risk tolerance. But, you know, if you want, you know, to think about, say, the future, you have to imagine, well, if the price drops down to $6,000, if we go down to the 200-week moving average, which is at 59.50, will I be able to capitalize on it? Or am I setting myself up so that I have all my money in the market, and if we do see a drop, you know, I basically will have to capitulate to pay my rent or something. So you never want to invest more money than you can afford to lose, because you can see how quickly we can turn around. In this instance over here, back in March, I mean, the time that it took to go, you know, just to basically stay at the same price, if we take a measured move from, say, this point over, the price didn't change if you're just looking every 100 days, okay? In that situation. So if you looked at the price here and then looked at it 3 months later, the price would have essentially been the same. But if you're struggling to pay your rent month to month and you see something like this happen, then maybe you're the person that capitulates at the bottom here, you pay your rent, and then you see Bitcoin, the price of Bitcoin goes straight back up. And this is why I say this is a very risky market. You know, there's always a quantitative risk that you can assign to, say, an asset, but even the cryptocurrency market in general is a risky asset, and it's very volatile in the short term. So be prepared for something like this. I'm not saying it's going to happen, but this is why I iterate over and over that if it does happen, you need to be prepared. So this is the primary point. With that said, I'm not saying that again we're going to have to drop to that level. I mean, if you look at the trend of Bitcoin, you know, over the last several weeks, we've been doing pretty well. And in fact, our first barrier that could keep us from going to those levels would be the 20-week moving average. And let me go ahead and pull that up. So this is the 50-week. So the 50-week is higher than the 20. So I mean, the 50-week is at around $8,800 or so. You can see it's 87.63 according to the BLX. So there's maybe a little bit of support in there. You can see we've kind of been holding in a support for a few weeks, and we've started to move off of that support region. But if we change this to, say, the 20-week moving average, which is our, you know, it's the poster child in a sense of what a bull market is defined as in terms of it being our historic support during a bull market, this is at 82.64. So 82.64, let's say 82 to 8,300, this is where we would want to hold if you see us drop in the short term. Because if we don't hold that, if you see weekly candles closing below the 20-week moving average, then likely our next stop is the 100-week at 7,200, and then the next one after that could be, you know, the 200-week at around $6,000. So again, on this channel, we don't claim to know. We don't claim to know what's going to happen in the short term. We prepare ourselves with what the math suggests will happen in the long term. And the math suggests that the next peak isn't until 2023. And what happens in the short term, again, is largely irrelevant. If we go up in the short term, maybe you take profits. I mean, it's not financial advice. If we go down in the short term, it'd be wise on my end to continue to maintain capital. So again, I mean, I just want to say, be prepared for what happens. What the price of Bitcoin does is irrelevant. It's how you react to it. If you'd like help with having a plan and testing, different selling strategies, we have that on the premium list. You can check that out at intothecryptoverse.com. You also get a weekly premium video and a weekly premium report, as well as access to a Google Sheets dashboard with live risk metrics and all sorts of stuff. So if you want to join, what we're building over there, check it out. There's a lot of people involved, and would love to have you. So I look forward to seeing you guys over there. You'll get a welcome email. If you want a discount, you can pay with cryptocurrencies. So check out the website intothecryptoverse.com, and then just focus on what the price is doing. If you see us dropping down to the 20-week and you're invested in, say, 100 different altcoins, then you might want to reconsider your portfolio allocation. So that'll wrap it up for this video. I hope you guys enjoyed it. I'll see you guys next time. Bye.